Hello students, welcome back. I am Manish from SURAJ School, MAHENDERGARH. SURAJ School, where every child is special. SURAJ School always aims to create all our development of the students. Dear students, in last lecture, I told you some basic accounting terms. Today, I will also tell you some other accounting terms. Dear friends, today's first accounting term is expenditure. Expenditure, any disbursement of cash and transfer of property for result acquiring some assets, goods and service is known as expenditure. Again I repeat it, any disbursement of cash or transfer of property result for acquiring some assets, goods and service is known as expenditure. Dear students, for acquiring some assets or goods or service, where person pays some things, a business pays some things, some cash or transfer the property, that is known as expenditure. And dear students, expenditure can be three types. First is capital expenditure, second revenue expenditure, third deferred revenue expenditure. First one, capital expenditure, any expenditure which are incurred for acquiring some assets or increasing the value of fixed assets is known as capital expenditure. Again I repeat it, any expenditure which incurred for acquiring some assets or increasing the value of assets is known as capital expenditure. Dear students, for purchasing an asset, for getting an asset, any expense, any money paid is known as capital expenditure. Other than through this, the value of the earning capacity of assets will be increased. That is known as capital expenditure. Through an example, I tell you, dear students, just like if you purchase a car for rupees 5 lakh, car registration expense, car other assessment expense also included in cost, just like registration expense 50,000 and insurance expense 10,000. Then car cost will be 5,60,000, not 5 lakh. It means for increasing the earning capacity of the assets is also including capital expenditure. These expenses also including capital expenditure. Dear students, next is revenue expenditure. Revenue expenditure are those expenditure the benefit of which is arrived a full year is known as revenue expenditure. Those expenditure whose benefit are arrived during a particular year is known as revenue expenditure. Just like rent, salary, commission, etc., insurance. These are the revenue expenditure because their benefit can be derived only a full year. So these are the revenue expenditure. Revenue expenditure whose benefit can be arrived throughout a accounting period is known as revenue expenditure. Their benefit can be derived from a full year is known as revenue expenditure. Next one is deferred revenue expenditure. Deferred revenue expenditure, those expenditure which are revenue in nature but their benefit can be derived for a number of years. Those expenditure which are look like a revenue expenditure but their benefit can be received more than 1 year, that is known as deferred revenue expenditure. These benefits can be derived from 3 to 7 years. These are known as deferred revenue expenditure. Again I repeat all the three types: capital expenditure, those expenditure which incurred for acquiring some assets or increasing the value of assets is known as capital expenditure. Revenue expenditure, those expenditure whose benefit are received during a particular accounting year, whose benefit can be taken only an accounting year, that is known as revenue expenditure. Deferred revenue expenditure, those expenditure which are revenue in nature, but their benefit can be derived from 3 to 7 years, is known as deferred revenue expenditure. And dear students, here important question: difference between the capital expenditure and the revenue expenditure. First of all, the definition, meaning can be used for the meaning. I told you capital expenditure, those expenditure which incurred for acquiring some assets or increasing the value of assets is known as capital expenditure. Revenue expenditure, those expenditure whose benefit can be derived for one accounting year is known as revenue expenditure. Second, it shown in the asset side of balance sheet. These are shown in the asset side of balance sheet. These are shown in the debit side of profit and loss account, trading and profit and loss account. Profit and loss account include cost of assets, expenses on acquiring assets. Its example: rent, salary, commission, etc. Dear students, first of all meaning. Second, capital expenditure shown in the asset side of balance sheet, revenue expenditure shown in the debit side of profit and trading and profit and loss account. It includes cost of assets and expense on acquiring assets. It includes rent, salary, commission, etc. Dear friends, it's the most important topic. Next accounting term is expenses. What is the meaning of expenses? Expense incurred on production and sales of goods and service is known as expenses. I repeat it. Expense, those costs which incurred on production and purchase of goods and service is known as expenses. Just like if your business is trade business, then purchase of goods is expense. If your business is production business, then cost of purchase of raw material is expense. Again I repeat, if your business is trading, means selling goods and service, then purchase of goods is known as expenses. If your business is production, then cost of purchase of raw material is known as expenses. Next one, income. Income, simple formula से calculate can be very simple formula. Difference between revenue and expense. Difference between the revenue and expense is known as income. What is the revenue? Revenue means sale of goods. Revenue means sale of goods. Or expense means cost of goods. Means income. Excess of money received from sale of goods from the cost of goods is known as income. Simple formula: revenue minus expense. Difference of revenue minus expense is known as income. Revenue, money received from the sale of goods. Expense, cost of goods. The difference between the sale of goods and cost of goods is known as income. Next point is profit. What is the meaning of profit? Profit means difference between total revenue minus total expense. I told you definition of profit, difference between total revenue minus total expense. It means all the money received from the business. Just like if your business is cloth business, all the money received from the cloth business, that is the total revenue, and all the expense for cloth business, that is the total expense. Difference between the total revenue and total expense, that is known as profit. Next one is gain. What is the difference between the gain? Profit earned from the particular business and gain received from the event. Event means if you sell your assets more than cost, that represents the gain. If you are sold your goods more than the cost, that is the profit. If you sold your assets more than the cost, that is known as gain. Next term is term number 6, loss. Loss. So two cases. First is the through the business. If goods, first one is loss. Total expenses minus total income, revenue. If total expense is more than total revenue, it's also the loss. But in event, if assets are sold less than the cost, that is also represent the loss. Loss can be two cases, for the particular business and for the event. Next accounting term, dear students, term number 7, 6 loss, 7 purchase. Purchase represent goods. Goods means those things in which a business deals. Just like if your business is cloth business, then cloth is goods, and in that so furniture is assets. In furniture, so furniture is goods, other than furniture is assets. Then purchase represent goods, and goods in which business deal. Goods mean in which business deal. Business deal. Dear students, if a business purchase goods, it represents purchase. Next point is purchase return. Purchase return. Purchase goods returned by business to the supplier is known as purchase return. Purchase goods are returned by the business to the supplier is known as purchase return. Ninth term is sales. Sales thing means those things in which business deal. These things are sold to the customer, and money received and other things received, that is known as sales. Sales means transfer of ownership of goods is known as, by receiving some cash or property, is known as sales. Transfer of ownership of goods or service by receiving some goods or assets is known as sales. Last one, sales return. Last one, sales return. If some customer return their goods to the business, that is known as sales return. Again I repeat, purchase, those things is with business deal. These things are purchased by the business is known as purchases. Purchase return, if business return purchase goods to the supplier, is known as purchase return. Sales, transfer of ownership of goods and service by receiving some cash or property is known as sales. Sales return, customer return us sold things, that is known as sales return. Dear students, these are some accounting terms. I hope you like this lecture. If you like our lecture, then continue with our YouTube channel. Thank you. Have a nice day.